it in her stuff. I know for sure it's in the 5157. And that's on page 8 of this little handout.
Oh, yeah.
Mm-hmm.
But tax laws will do that automatically, won't it?
ACA 12 is also an ACA 12
Probably.
implementation.
All right, so we're back on the 8962 because Spencer did purchase health insurance through the marketplace. And we know from his Form 1095A, even though I did it wrong, that he did receive some advanced premium tax credit. This is another document that, clients are going to have to bring in with them. If they don't, their return is going to be incomplete until they do so. And you'll remember on the incomplete form that Letty was showing you earlier, that is one of the check boxes that we have on that form. So if you'll scroll down, and now back up a little bit, Emily, because there's two questions we have to answer right here in the middle. Number 9, did you share a policy with another taxpayer or get married during the year? If this is yes, this is where we're going to have to huddle and figure it out. Again, I was looking through the instructions to the 8962, which is where this is told how to do it, but they're not final. So there's no reason to spend a whole lot of time in learning this in case it changes. Yes, sir.
What is share policy with another taxpayer?
That means you purchased a health insurance policy. Let's say you're divorced and you purchase insurance that covers one of your children that actually lives with their other parent. That would be a shared policy. Or if you divorce during the year, originally you bought a policy together in the marketplace and then you divorce, well, you're going to have to split that policy somehow. The credit, the premiums, all of that.
So basically what that means is if you share a policy with somebody who is on another tax return someplace else.
Yes.
Not on this tax return.
So it could be your sister or your parent.
Or it could be,
you and I.
If they're not claimed on your tax return.
My daughter, that is under my policy, my insurance policy, but she files her own taxes.
yeah.
It's not on the return.
It is not on my return, she files her own taxes.
And then line 10 is the question as to whether the Form 1095A accounts for everyone, coverage January through December, with no changes. And if that's the case, then you only need to fill in the totals on line 11. Now, in Spencer's case, the answer is no to that because his insurance didn't even start until June. And so when you get down into these lines below, you have a lot of data entry because you're going to need to actually fill in the data that's on the 1095A. TaxWise calculates a few of those columns for you. I'm trying to find my 1095A here.
So you have to put the premium and then the premium of the second lowest cost silver premium and then
That information.
So the marketplace provides you that.
monthly premium. So you get it off of this form. You have to type it all in.
Yeah.
So you'll see as Emily's filling that in that TaxWise calculates columns C, D, and E for you. But another issue, and my understanding is that each individual gets their own 1095A, is that correct, insurance people?
Have no idea, have
We have no idea.
never seen one.
For the family?
We don't know.
That's exactly, I don't know if it's one for the
They must.
family or one for.
Yeah.
Yes, we're buying policy.
By person?
Yeah, because you do this.
Well,
Only one per, yeah.
Well,
one
and it has
per-
spouse's name
No,
on
it
here.
says coverage of household, and it says the different people, so I would assume it's gonna be for the household.
Yeah, hopefully everyone will be on
Because
here.
supposedly
That's the way you
everybody needs to
calculate
get
the
same
tax credit.
form.
I mean, the premium,
Premium
yeah,
tax
premium
credit.
tax credit.
Like supposedly.
Which is, I guess, why when, if there's a divorce and the marketplace, and if it's particularly if the client doesn't report that change to the marketplace, they're only gonna issue one 1095A. And then this is gonna have to be shared between the two spouses so that they can divide this up appropriately.
For some reason we said May wasn't correct, so, right? Because he actually
Yeah,
purchased
she-
in May, so.
Right.
So when you start doing.
The 1095 says May.
I know, Carol, I did it wrong.
So do we believe the 1095?
We need to believe in the 1095.
Well, you hope that the marketplace knows better what they're doing then.
So I believe the 1095.
Yeah, except in this case. Because it was a
Take
dummy.
the 1095 as gospel.
Yes, ma'am.
So the $1,400 advance payment, oh no, I'm sorry, is it 1442 or 1400?
Well, that's the total tax credit.
Okay, so the 1,400 is the advance payment.
Yes.
That that amount has to go back to the 5329 and reduce his exemption by that $1,400, is that correct?
I don't think so.
No.
Mhm.
The 5329?
Well, when we're looking at the exemption that he's claimed for the 10% additional tax on the distribution from his, an early distribution from his
Right.
IRA, does he, since he doesn't, he's getting this premium tax credit
Right.
that covers part of his, does that have an effect on the 10%
No.
additional?
No.
No, it's just gonna be, the $42 will be added to his refund or deducted from tax he
So
owes.
what she's saying is that he owed a 10%
10%.
additional penalty
Yes,
because he withdrew money early.
correct.
We did, alleviated some of that penalty because he spent money on
Right.
his insurance. But he did not spend the whole $1,900 on insurance. He only spent
1,400.
$1,400, yeah.
No.
He only spent $200 or $300 on insurance because the resident was paid for the premium tax
368.
credit.
Yeah.
Okay.
So you can't claim that he spent it on insurance when it was paid for with the premium tax credit.
True.
So he owes 10% penalty on almost all that money he withdrew.
Yeah.
Okay.
But for the-
Yeah, it's just because I wrote my problem incorrectly.
No, it's not that. He had $1,968 in monthly premiums.
Yeah.
And, or less than that actually, because
Because of May,
because of
yeah.
that.